All right, good afternoon, everybody. Mark, it's an exciting time to be alive. The fourth quarter's gotten going, and we're just talking about this. We've seen $15 billion of M&A in the last 2 weeks, and we're putting up new lows every day. Give us a little macro backdrop here. What's happening?
Yeah, well, I think we should separate out kind of the M&A activity, which we've been talking about, Jonathan, for some time. Sort of given the need of the large companies to source innovation externally and augment top and bottom lines, et cetera. So it is playing out the M&A thesis. And unfortunately, to your point, we're plumbing new lows. So let's talk about that first, right? So look, we're in October. It's tax law selling season for a lot of funds that have fiscal year end, end of October and coming up. So what we're seeing on the trading side is S&P Select Biotech Index, under heavy pressure every day, indiscriminate selling, making new lows here. It looks like we might challenge or test the low from the pandemic lockdowns in 2020, Jonathan, and also that was retested in June 2022. We're just a few percent above that, kind of as we sit here at the moment. So we might see a test there. We're hoping that test doesn't fail. But I'm seeing a lot of technicals, positioning, tax loss selling. A lot of this is non-fundamental, kind of short-term selling pressure. What we're seeing.
Yeah, well, let's talk a little bit about some of those M&As. The first one comes to mind, the big one so far is that Roche deal. That's a huge, what is it, $7 billion? Tell us a little bit about that and how it played out.
Yeah, so Roche announced this past Monday morning, that they're going to acquire Telavant, which is a subsidiary of publicly traded Roivant, ticker ROIV. So Telavant is developing a TL1A targeted autoimmune and inflammatory compound. Interestingly enough, Jonathan, this was the same target that Prometheus was developing, and Merck bought Prometheus earlier in the year for just under $11 billion.
Wow.
And this deal actually is about in line because Telavant owns U.S. and Japanese rights. Pfizer still retains European rights. The asset was spun out of Pfizer, incidentally, and Pfizer owns a residual 25% of the equity in the Telavant subsidiary. So Pfizer, gets a small benefit. But if you add up the U.S. and the Japanese market, Jonathan, it's about 70% of the total, and 70% of that about 10, 11 billion Merck deal is about the 7 billion here. So it's very much in line with the Merck deal. But largest deal Roche has done since 2014, Jonathan. So
whoa,
nice to see them get out their checkbook.
Yeah, but still the market went down. Well, let's talk about two other ones that were really interesting. Point Biopharma, that's another one that happened, I think it was 2 weeks ago. What went on and what's some of the inside baseball there?
Yeah, so Eli Lilly stepped in to buy Point, ticker PNT. The headline number was $1.4 billion. Point had 400 million of cash, so let's call it like $1 billion pro forma in terms of the acquisition, price. Interestingly enough, so Point is developing radiopharmaceuticals for different oncology indications, and they have a big data set that's going to read out later this quarter. And so it's unusual to see an acquirer step in front of a major data set.
Right.
And it looks like this is more of an opportunistic kind of fire sale deal here. The Point stock had been trading at a depressed level. I think the Lilly BD team saw an opportunity to get the asset for not a huge premium. They also have a manufacturing facility in Indianapolis, which is in Lilly's backyard. So there's some strategic value, and I think that Lilly was probably looking at it and say, well, we expect the data of the lead asset to be okay. We can justify stepping in front of it, and we're getting the manufacturing facility out of the cash, so they were comfortable from a strategic standpoint. But look, it's nice to see M&A happening. It's even nicer when it raises more boats in the sector.
Yeah, well, that's true. Another one that just happened, another big name in play here is Mirati, target acquisition by Bristol-Myers here. Same kind of idea?
Yeah, I'd say this is more squarely in the kind of bargain basement M&A basket. So Bristol's paying kind of about $5 billion up front for Mirati, ticker MRTX. Mirati actually has an approved drug for a number of oncology indications. It's a targeted KRAS therapy, and they're competing with Amgen, who is the other competitor there. And the acquisition price from a stock price perspective, it's down substantially from the peak of where Mirati was trading. It's
Yeah.
it's 75% or more of a discount from the peak of the stock price. And I think that it makes strategic sense. As a decent premium from the current or as before the deal announcement share price. And there's a lot of R&D that needs to be done, Jonathan, to unlock the full value of Mirati's assets. They have to run a bunch more studies to move into other lines of therapy and lung cancer and some other indications, and that's going to cost hundreds and hundreds of millions of dollars. So, I think the shareholders and the board, probably evaluated their options, thought about the cost of capital to finance that, independently, even though Mirati has a good cash balance, they were going to need to spend all that and more. So I think that was really the motivation for this particular deal.
Gotcha. Well, let's stick with the good news. Not really an M&A opportunity here, but Immunovant. That's a stock we see just a straight line up. What's some of the reason for that in this weird environment?
Yeah, so one of the winners based on clinical data release. So Immunovant is developing an FcRn antibody program, and the comp here, Jonathan, is argenx. So
Right.
argenx is the $30 billion, 800-pound gorilla, freestanding mid-cap biotech that's launched its own drug, Vyvgart, which is the first FcRn inhibitor kind of out of the gate. And this thing's doing fantastic. It's peak sales projections on the street are 7, 8, 9, $10 billion. It has 20, 30, 40% CAGR from here into the next 5 years, on a multi-billion-dollar run rate. So it's a great success story. And Immunovant's drug, could be as good or better. And it's a freestanding option that could be acquired by a player that wants to enter that space. So that's why Immunovant's up 100% year to date. It's trading at a multi-billion-dollar market cap because it's a nice comp for argenx. It's expensive to go buy argenx, right? We're not seeing
Yeah, that's right.
Roche wrote a $7 billion check, which was a lot. argenx at 30 billion market cap. If you put a premium on that, you're talking, I don't know, 45, 50, something there. That's a tough nut, given where it is. So, Immunovant starts to look pretty interesting then. If you want to enter this space and you want to acquire an asset, that might be the way to go.
Yeah. Well, let's finish then just with your kind of perspective on trading right here. We're pushing a low we haven't seen in a while here. We've seen a lot of creative destruction, especially as interest rates have gone up. Are things cheap? Are things dangerous? Like, what's kind of your feel for here? Do you wish you had more cash? Are you raising cash? Are you happy where you're at? What are your thoughts around that macro kind of positioning perspective?
Yeah, Jonathan, look, I think now's a good time to have cash around. Certainly the rise in interest rates is going to pressure longer duration assets like biotech stocks, and companies that are more exposed to dilution risk are going to be, more in the crosshair. So it's going to be a mixed bag, right? And I think that, portfolio managers are going to have to prioritize, companies and stories that, don't have as much dilution risk and have, stronger balance sheets and shareholders that can support those companies' near term milestones, for example. There's going to be winners and losers here. So, we're, reevaluating some of our holdings, and, anything that, we're concerned about dilution risk, or, that they might be positioned from a balance sheet perspective. We're going to have to make some hard choices here. So we've raised cash, but we're also at the same time seeing some great dislocation opportunities. And there's some really interesting assets that we see trading below what we see as fair value. So I think it's going to be a picker's market. The indiscriminate selling gives an opportunity for stock selection to play out, and we're excited about this opportunity. But certainly, I think for folks that don't have exposure to the sector, look, there's blood in the streets right now, and I can't. It's always hard to call the bottom exactly, but I think it's fair to say we're closer to the bottom than the top. And it's probably worthwhile refreshing a look here at this sector, because I think coming out the other side of this, when we do see a pivot, there tends to be really strong performance right at that moment, and so getting
Sure.
in front of that tends to make sense.
Yeah, it feels like pessimism all around, except there's a lot of optimism to be found in this sector too, which it's a weird place to be, but usually that's the time good stock pickers like yourself take advantage and end up looking pretty good in the medium to long term here. So I'm sure we'll see that again from the doctor. So appreciate your time as always.
For sure, Jonathan. I would say the M&A is not done too, right? We've got,
No.
15 billion or so, kind of coming out of the blocks here in the fourth quarter. We're going to see a bit more. It's not really reflected yet. I think where the index is pricing, and that's an opportunity. Don't forget JP Morgan conference January next year. It's not too early to start thinking about positioning for that.
No, and you talked about in your quarterly letter too that the cost of kind of meeting some of these legal requirements and the cost of paperwork is just going to go through the moon. So people need to be ahead of that, or else they'll have 400 or 500% premiums on what they're paying. And for a $7 billion acquisition, a $45 billion acquisition, you don't want to be on the other side of that. So I think you're right. Maybe this quarter, maybe next quarter, I think it's feeling for a bottom, and we could see, like we often do in biotech, a good recovery, a good way out.
I certainly hope so.
All right. All the best to you. Thanks so much, Mark. We'll talk to you again soon. Appreciate your time as always.
Thanks, Jonathan. Thanks, everybody.